Hello everyone, it is the 29th of June 2021. We are into the second trading day of the week. So in this video, we are going to run you through our 5 most focused markets: the Euro dollar, gold, Nasdaq, US oil and Bitcoin. And of course, we are also going to talk about the dollar index at the very beginning. So we are going to discuss about the current market condition, and we are going to share with you what is our trading plan for the day. Alright, so let's look at the dollar index. Alright. So in the daily time frame, we know that the dollar has always been on the downtrend for quite a long time, and then it broke out right here, and then it fell into a range, right? And right now it is actually something like a descending triangle. And what is notable is that the dollar, as of last week, right, it found resistance at the top of this descending triangle or the consolidation formation. And it is also resisted at this yellow moving average. So yesterday we saw that the price attempted to go up, alright, but it pulls back later on, even though there are supports right at the bottom, as you can see, at about between 91.5 and 91.7. So although there's support, but we still don't see any buyers. And if this continues, there's a very likelihood that we will start to see the dollar going down again, alright. Because at the end of the day, it is right now trading at the top of the consolidation, and based on the fundamental, because of all the money printing, the unprecedented easing of monetary policies from the Federal Reserve, in the long run, the dollar will still continue to depreciate. Alright, so let's take a look at the euro against US dollar. So for the euro against US dollar, we know that essentially we saw that it actually formed a rising channel. So it found support at the bottom, went up, but then got resisted somewhere at this supply zone. It got resisted at this supply zone, came down again, and it actually broke below the bottom of this rising channel as well, and went up. And right now it is seen persistently resisted right at the bottom again after it tested. At the same time, we are seeing that it is also forming a symmetrical triangle as it consolidated ever since last year October. So this is a very huge range. Because of the recent bearish market, it actually went all the way down and broke below the equilibrium level, which is the middle of this entire range. So therefore, we do expect that euro dollar will continue to go down in the short term. But at the same time, we are also seeing constant support coming from the bottom. All right. So therefore, if you look at the 4-day time frame, yesterday we are actually looking for an opportunity to buy, as it might form a rising channel right here as well. But then the price broke lower, and however, in the morning itself, it attempted to go down, after which it pulls back quickly. So it is really kind of hard to judge whether the price will go down or will go up, because if we were to pull out Fibonacci from the low, from the swing low to swing high right here, it is still supported at the 50% level, and even if it goes down a little bit more, it's going to reach 61.8%. And right here you can also see that there is support previously, right? Price went up here, formed a little support, came down, alright, at a similar demand zone right here. It found support and went all the way up again, and right now it's coming down. And one thing is that I think based on the previous bearish markets, it is kind of oversold. Although the consolidation has went on throughout the last entire of last week, but I still see there's a possibility for the price to go up even further. And one of the reasons is that if we were to pull out a Fibonacci from the swing high right here all the way to the swing low, we can see that the price is still not even reaching the 30.2% retracement level, which essentially tells us that the pullback might not be enough for the market to go into selling mode again, right? So, and of course, we can see that this level right here, right, right below the 30.2% is the key supply zone in order for more sellers to actually come in and short the market. Alright, so therefore we are still going to attempt, right? We're still going to attempt to buy again. Alright, I know it's kind of a little bit stubborn, because you see that the highs are getting lower, lows are getting lower, of course, right? Very obvious. But I just think that, right, the pullback is still not done, and if it were to go down, it should have gone down already. So that is just what's going in my mind. So for today, all the way back into the 1 hourly time frame, in fact right now we're already seeing support forming right here, and there's a very bullish candle that rebounds off from this area, and actually just right below here you can see there is a a demand zone at the bottom as well. So let me say, if let's say we want to go for the buy right now, I think it's pretty good price. Okay, of course if it goes lower it will be a better price, but anyway, if we were to buy right here and we set a stop loss just right below the low right here, well below the supply zone and well below the 61.8%, our first target will be all the way back to the previous high right here, right, the very minor range top here at 1.1973, and eventually we will want to take profit as it goes right into the equilibrium level or the supply zone right here at about 1.2 flat. All right, that's our main target. But if it's able to go even higher, of course the most important level, right, is right here. This is where the price broke below and really trended very bearishly all the way down. So therefore this will definitely be the most important supply zone. All right, so that's pretty much for the euro against US dollar. Next, let's move on to the gold. All right, so for the gold, let's look at the daily time frame. So yesterday there wasn't much movement. Price went up, came down, and at end of the day it closed with a bearish candle, but doesn't say much. If it says anything, it is still finding support, right, at this price at 1,773. Has been supported throughout the entire of last week, right? So going to the 4-hourly time frame, yesterday of course we are also looking for a buying opportunity. In fact, we did went into a buy along. It went up, but came down again, so kind of touches our stop loss at the entry level, so a break even for that. Right now we have attempted to buy again because it is still persistently supported right here. All right, and if we look at the 1-hourly time frame, you can see that there is a descending triangle right here, and we just saw a pretty good rebound from the support again. Right now it is testing this level. If it's able to break above, all right, if let's say you haven't entered into trade, you haven't traded the support right here, if it's able to break above and pulls back into the same level right here at 1,779, then you can definitely look to buy the gold again. I mean, this will at least give you some sort of confirmation. Right, so we actually bought it right at the bottom, but anyway, let's just put it as it is right now. Stop loss just of course below the low, right, of this entire support, and the first take profit target will be right here. Right, we can see this is the resistance, and of course this will bring us to the top of the entire consolidation right here. So that will be the very first target, and if it's able to go all the way up, of course we'll look at the resistance level right at the top, 1,796, and last but not least we want to see the price goes all the way into this supply zone, and that will bring us to the 30.2% Fibonacci retracement level. But however, just like the euro against US dollar, the most important, the very key level to really for us to look for a sell is really right at the equilibrium level, and of course the Fibonacci 61.8% at 1,856, all right, to be specific. But in any case, just for today, our final target will still be right here, because this will be 40 over US dollar movement. All right, not really uncommon in gold, but it's still kind of rare on a daily basis. All right, so that will definitely be the final target. But to be comfortable, I think somewhere right at 1,008 will be good enough as well. This will be our trading plan. All right, I guess somewhere about 1,805 will really be good enough for us to take profit for the day. All right, next we have the Nasdaq. So the Nasdaq, we are actually looking to buy, right? So price came down, found support, and it went all the way up. But in fact, we're actually looking for a retest, but that didn't happen. It broke out of this consolidation, and then it just shoot all the way upwards. And right now, right at this price, 14,530, right, exactly at the level that we have plotted right here, the price found resistance and started to peel off a little bit, but of course we haven't seen any selling coming in right now. If we were just to look at the entire condition right now, obviously it is still very bullish, and therefore the Nasdaq might still be able to go up even further, So obviously the next level to actually buy is right when it comes back to the previous high, right, a resistance and support level, right. That will also help us to complete, right, two wave of a pullback, very minor wave, and that is where we can actually decide whether we want to try buy the Nasdaq again, alright, back to the previous high right here, and eventually all the way to the top of the channel. Alright, that will be as high as 14,700 to 14,800. Alright, we are not so sure whether it will be able to reach that level, but one thing to really take note is that I think the Nasdaq is definitely a little bit overheating, but yes, at the same time there's definitely still more room to go upwards. So since it has already turned bullish right now, there's a lot of breakouts, why not just follow the trend, trade what you see, and just wait for a pullback and buy again. Alright, so if that is the trading plan, then we'll be looking at to buy right here, again back to the bottom of this riding channel, and of course the resistance and support level, that will be somewhere about 14,444 all the fours at the back. Alright, and the stop loss just of course below this level. I'll actually pull a Fibonacci, alright, from this swing low to this swing high. And just to be safe, we want to set our stop loss right below the 70.6%. That would be somewhere about 14,355. And in terms of our target, first target definitely back to the previous high. And last but not least, based on the average volume, when it trends upwards, I think this is pretty much average, so we can actually aim for our final target to be at 14,640. Alright, I want to be a little bit conservative, make it 14,600. That would be good enough. Alright, so that is our trading plan for the Nasdaq. Alright, moving on, we have the US oil. So for the US oil, yesterday we are actually talking about a pullback, right, back into this demand zone, and then to look for a buying opportunity. So if you look at the 1 hourly time frame, you will see that this is kind of like a neckline right here. Price broke upwards, came down, but it did not find any support. In fact, it just break right through, right? So this demand zone is no longer valid. And of course, when it went down a little bit more, we kind of try to attempt to buy the game, because there's a lot of support right at this area. So there's really very little reason for us not to actually try buying it, and especially US oil is such a bullish market right now, right? So but in any case, it didn't really go so well, end up with a little bit of losses. Doesn't matter. Right now we are seeing support again at this demand zone right at the bottom here. Obviously a lot of support going on, coming to this yellow moving average as well, and right now we are seeing some sort of rebound as well. So definitely for the US oil, we will still be looking to buy. In fact, if it's already trading at the bottom of this entire range right here at the top, why not just try and attempt a buy again for the US oil? I think that is fair enough. Now, however, we also want to take note, what if it actually breaks lower, right? If it breaks lower, the most important level next will be at this level, 71.6. Why? Because if you pull a Fibonacci retracement, swing low to swing high again, you will see that is the 61.8% level. Now, of course, very important demand zone right here, and therefore this is what we're looking at. But however, if it's able to rebound all the way, of course, the attempt to buy right at the bottom here will be great for us. But in any case, if we were to try to buy right here, I think as it goes up, we really have to be careful. Now, first thing first is that you have to understand that the price has recently just broke below a riding channel here. Right, broke below the bottom, pulled back once, got registered, came down, pulled back for the second time, essentially completing a retracement channel, and goes all the way down and break below this trend line again as well. So actually, in the short term, US oil might have turned bearish for now. And if you look at the formation right here, this candlestick formation right here, obviously this forms a important supply zone for us to consider to actually sell. Well, in fact, with that, I just want to quickly change my decision, right? Rather than trying to buy at this bottom right here, I'm going to try attempting a sell But at the end of the day, yes, although we are very bullish on the US oil, but we definitely see overbought sentiment, and there are a lot of resistance, a lot of breakout of a bullish structure. So therefore, I think it is fair enough for us to try attempt a sell instead. All right, so the trading plan instead will be to look for a sell right at this region. All right, so as much as possible, I think I want to go for a sell right at the top of it instead. Why? Because if we have to pull out Fibonacci again, right, swing high to swing low, the 61.8% level is actually right here. All right, let me say it can actually go a little bit higher, and after all, the breakout area is actually right at this price, right? So who knows? Actually, the supply zone should be slightly higher actually. So if that's the case, right, I think I'll just readjust this maybe nearer to the 61.8%, right, the pullback level, right, the breakout level, about 73.55 is where we want to really sell, short the US oil. Obviously, there's good resistance level right here. All right, we have seen a lot of resistance right here as well. So this will be the best price for us to look to sell. The more specific, there will be 73.5. So that's where we want to short US oil in terms of target, of course, back to the bottom of this entire range right here. And after which, if it's able to go all the way down, break below, the final targets will be at the 61.8% retracement level. That would be about 71.6. all right, so that is for the US oil. So last but not least, we have the Bitcoin. All right, so the Bitcoin, yes, we are actually looking to buy again, right? As it pulls back, touches this trend line, we actually call for a buy right here. So indeed, it went up, but it is still essentially ranging right at this area. But obviously, I mean, to the naked eye, it does seem that the high is trying to get higher, lows are getting higher as well. So there's a good chance that the price may just go all the way up and break out of this consolidation right here, and of course the supply zone right at the top here. Or I guess if you agree that it will continue to go up, well, there's nothing much to ask of it. If you want, all right, you can actually look to buy right now. Stop loss just right below the consolidation, at least below this low. So maybe you can set it somewhere at 33,500. Entry will be somewhere right now 34,950. And our target, all right, of course, you still want to be careful as it reaches this area. All right, a lot of volume right here, definitely selling and buying right here. And after which, we will just aim for this level right at the top, because if you go to 4-hourly time frame, this is the level where the price broke below and forms an important supply zone. And again, if you put out a Fibonacci retracement, it is right in between the 61.8 and 78.6% retracement level. So important supply zone for us to take note of. Of course, final target, I'll say that at 78.6%, all right, because this is actually a neckline area. You can see this level is actually pretty important, from resistance, right, turn into support, and then after it broke, it went all the way down. So definitely a very important level to look out for. So to be exact, that will be about 38,050. So with that, I have come to the end of today's forecast. Thank you for watching. If you like what we do hit the like button, subscribe to our channel, and we will see you again tomorrow.
I